Welcome. This is Jeff Wright with Fish Creek Capital. This is Monday, December 8th, lunchtime profits. I think I'm going to have to change this to at the close or after the close. It is around 4 o'clock Central Time. Just going over education and news, finance news, especially focusing on dividend growing companies. And today, let's gather. I had a few meetings that were great, and so yeah, let's just look and see what happened today, Monday, December 8th. Again, hopefully this is helpful information for you, and it gives me a chance just to grow my skills of speaking into a camera and learning how to communicate better, and hopefully again providing good education and financial news. So let's look at the market for today. Let's see how we closed. Yeah, so the Dow was down 0.5%, the S&P 0.35%, and the Nasdaq was basically flat, down 0.14%. The VIX, which is the volatility index, was up 8% today. And I think the news for this week, there's going to be, of course, the Fed meeting starts tomorrow. That's going to be big news. I was looking for my list here. So the Fed meeting starts tomorrow. They'll have a 2-day policy meeting. The expected rate cut is still 25 basis points. We're up to like a 90% chance of that happening. So it would be really unusual for that not to happen at this point. That would get the rate level to 3.5%, 3.5 to 3.75%. Of course, everyone focuses on the press conference that it will be at 1:30 Central Time on Wednesday. Jerome Powell is going out of office. Of course, I think again we talked about this last week. Trump is going to pick a friendly ally for the Federal Reserve, at least who he'll recommend for next, for the next appointment. I can't imagine that they're not going to want to cut rates. I don't know if Powell will. I mean, I'm sure he'll speak to it or on Wednesday, but it's not like he's going to be the guy going forward. So I don't know if it'll matter or not. The next guy's going to be the important thing. So really the takeaway is if we did not get a rate cut for some reason, that would be a big surprise. I think it probably definitely would upset the markets. But at this point, 90% chance it should be a shoe-in. The earnings, we got some big companies this week with earnings. Oracle will be on Wednesday. Of course, it has had a monster year. At least it went up way too much, in my opinion, from the AI trade and all the AI investment stuff. So that'll be Wednesday. Got Broadcom on Thursday. Lululemon is on Thursday. Lululemon has been down in the dumps. I would say that company's been on sale from a valuation standpoint. And so, yeah, we'll see what they say on their report on Thursday. And Restoration Hardware is also Thursday. I do like their management. That stock moves around a lot more than you think it would. But they've been very tied to tariff headlines and things this year. So it'll be interesting to see what their earnings report looks like on Thursday. And that's probably the big companies. Costco is Thursday also. Their earnings are Thursday. Love Costco as far as a shopper, and that company just grows and grows, produces a ton of cash flow. Be interesting to see what they say about their sales, because it can often be related back to, of course, the consumer and sentiment and what that retail shopper looks like. Tesla was downgraded today from overweight to equal weight with Morgan Stanley, and they did close down. It did bounce off the 50-day moving average, which if you're a long-term investor in Tesla, I wouldn't worry about that, but it did hold that level today. Let's see, it ended up being around just Yeah, 439.58. It looks like it's 440, a little higher after hours. So that happened with Tesla and Bitcoin. With the market kind of weighing or way down today, the Bitcoin did kind of hold up, honestly. Like it was interesting. Sunday night, or really Sunday morning, Bitcoin just kind of spiked down back below 80,000 or back below 90,000, but then it came right back, and it has held 90,000 today. The futures are right at 91,000 now, 91,500. Ethereum is still holding 3,000. The futures there are around $3,159. So that was probably positive for Bitcoin today, since the market was kind of down, but crypto seemed to hold up. And I'll show you real quickly, and then we're going to move on to why dividend growing companies are great for your retirement portfolio, like why you must have some dividend growing companies in your portfolio. Please like and subscribe while I'm going to share my screen here, and I can show you what the futures looked like again. That seems to be helpful. And then I'll also show you dividend growing companies must be in your portfolio. Okay, so behind me again, you'll see the volume profile. Here are the S&P futures. So you remember last week we just kind of chopped sideways. Friday we kind of opened up. Well, now we did come down today. You can see right here we did really just off the open. That's 8:30 was when the market opened Central Time, and we really did just go down all the way through that Europe close. That's mid-morning, bounced some, sold off again, and then we did close higher toward the end of the day. But we're still, after all that, we're back to Thursday's range, Wednesday, Thursday's range, even went into Tuesday's range. So we're still just kind of chopping around. Like, I wouldn't, again, don't overthink it, but you can just kind of see. I think it's a good picture, so you can kind of see what the market is looking like right now. But yeah, don't overthink it. Long-term investors, you want to just focus on your plan and making sure you have a good plan, and that you know what that plan is, and that you're confident in that plan. So let me show you now why dividend growing companies, in my opinion, are a must for your portfolio. Retirement portfolio specifically. Let's see if I can get this down to the screen that we're sharing. This is a calculator that is for, again, illustrative purposes only. I have tried to verify, of course, the calculations, because we do want those to be accurate, but this is just education, illustration purposes only, not investment advice. But let's look at the difference. If you just, of course, everybody knows dividends, that's no big deal. But let's take $100,000 account. I want to just quickly show you, and I'll do this again, but I wanted to quickly show you the difference that a dividend that's growing makes to your account. So you'll see all these, even YouTube videos about high yield dividend ETFs and high yield growing companies, like these high yield, like REITs, real estate investment trust and things. But does that really work longer term? So let's do a quick example. So here is an account. Again, this is Fish Creek Capital, $100,000 investment. We're not going to add any money to it. We're going to take an annual dividend yield of 3.7%. We've got a portfolio actually made up of 30 companies that average about 3.7%. That is a very conservative yield, not super exciting at all. But the growth of that yield averages out at 8.1% a year. That's going to be key. You'll see here. Let's go 20 years. We're going to reinvest the dividends. Mess that up. I'm sorry. We're going to reinvest the dividends. And we're at 100. We are at 100,000. Make sure I'm not doing anything wrong there. Okay, so just with no price appreciation, 3.7% yield, and a growth of 8.1% on that yield. That's on the yield growth. Now keep that. That's important. After 20 years, you'll have an income of basically $80,000 a year. And a yield on that cost, that means a return on your $100,000 of 79%. Of course, that's easy math there, but that's how these guys beat the market. This is how you get income for your retirement. And this is just off of $100,000. You're not adding any money to this. And look how your dividend income grows. This is not touching the principal. You're making a return here after about 8 years of 9% a year. Like that's how you beat the market. And you're going to have an income that's not even impacting your principal balance, which is key. It's almost like a real estate mindset. Like, when you buy a piece of real estate and you're looking for income, you don't really think about what you spent on that property in the sense of the value of that going up and down. You're just spending the income that property generates. Well, you want to think about investing in companies the same way. It's all cash flow, right? So at the end of the day, you would make $79,855, give or take. Again, remember, this is not investment advice. This is just directionally correct for educational purposes only. Just in dividends. That's just in dividends alone. So let's go back up here, though, and say that you've got a 5% price appreciation on those stocks. And what's cool about dividend stocks and dividend growing stocks is that the one reason they're growing their dividend is because their earnings are growing and their cash flow is growing. They are providing a good or service that is useful to the economy and useful to humanity. And that's why these companies are growing. That's the whole point, right? So if their dividend is growing, often their price per share is growing as well. So let's just say 5%. Look how it changes the balance. 1.4 million. Again, you're not adding any money to this. Your annual dividend is up to $200,000 a year after 21 years, and it's just growing. Look at the return that you're getting on this money. Like, this is how you beat the market. You don't worry about guessing the next AI stock. You don't have to stress out about all of that. You can have a proven model, data-driven model that can help you rest easy with an income source for retirement. So again, this is all growth. Let's just take this growth out. So we're at 1.4 million. We're going to take out the growth. Look how that drops. 1.4 million down to 554,000. This is just if you were just looking at dividends alone and not worrying about growth at all. So let's say we do that, though. You're probably going to go for a higher dividend. Let's go 5%. Okay, so that takes you up to 716. We're still half of what the growth is. Let's go up to 8%. We're still below what a 3.7% yield is with an 8% growth. So again, I think what I'm trying to show is here, like, don't focus on just the dividend. That's not the important part. You can see here an 8% yield, which you think would be great, especially over a 3.7% yield, would be better, but it's not, because that 8% yield, let's say it's not growing because that's a high yield stock. There's, it's a high flyer. They're paying out dividends every year at a high level. But what's the sustainability of that? And if there's no growth to it, it's really not that good. So again, let's go back to a conservative 3% dividend and 8.1% growth on that dividend. And I'm telling you, this is the way to invest for the long term. I've been way over my time today. Thank you for watching. I hope you made it this far. I'll probably do more videos on this again, because I think you just need to reinforce the mindset shift of how to invest in the market and what's going to give you the income and the returns that you need, especially for retirement. I'd love to help you with this. Please click on the link in the description below, and you can schedule a free 30-minute meeting, and I can go over your current portfolio, and we can talk about how this might help your portfolio if you don't have stocks or companies like this in your portfolio today. Also, please subscribe and like, and visit fishcreekcapital.com. You can also click on learn more at fishcreekcapital.com and reach out to me that way as well. We'll stop here. All right. Thanks for watching, and we'll see you tomorrow.